Federal Parliament's back, and so are international students and skilled workers. That's our main story this morning. Also today, cryptocurrencies split financial markets, AMP's boss looks for a brighter future, and where young investors are putting their money. It's Tuesday, the 23rd of November 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
Then stay listening for Sean's chat to Stephen Crisp, the Chief Executive Officer of Racing and Sports, a company listing on the stock exchange today. But first, Sean, as I mentioned, there was plenty going on in Canberra yesterday. Parliament was sitting again, the lobbyists were back in town, the Speaker of the House got an ovation, and Prime Minister Scott Morrison said fully vaccinated foreigners will be welcomed back to Australia without needing an exemption from the 1st of December.
Yes, Michael, more than 260,000 visa holders are now eligible to enter Australia, assuming they're double jabbed, of course, including 162,000 students and 56,000 people with economic visas. It will include holiday makers, skilled migrants and humanitarian visa holders. And the government will open up a travel bubble for vaccinated people with Japan and Korea. You can move between the countries without needing to quarantine. Great news. Mr. Morrison said the decision will help ease skills shortages and will be very welcome news for the higher education sector. Indeed, it will.
And one more I forgot to mention on that list of big events yesterday. Scott Morrison officially signed the AUKUS deal.
Yes, he did. That's a framework with the British and US governments about buying nuclear submarines. Under the agreement, Australians will be able to undertake training on operating nuclear subs. Of course, we're not going to get them for a few decades yet. The Prime Minister yesterday also said he'd spoken to Japan, a member of the Trans-Pacific Partnership, about China's push to join the trade grouping. He said for that to happen, Beijing would need to end its campaign of trade coercion against Australia. The TPP is becoming a particularly popular gathering, with Taiwan and the UK also wanting to join. But any of the current 11 members have veto rights, and Canberra won't allow China in unless it backs off its sanctions of Australian products. And finally, Michael, the Speaker of the House, Tony Smith, received a loud applause yesterday from both sides of Parliament. That's unusual. He's retiring, but pretty much considered one of the best speakers in recent times.
Yeah, not bad when you manage to earn the respect of both sides. Pretty tough job, I'd imagine.
Absolutely. He's been quite a remarkable speaker.
All right. So how did markets perform yesterday?
Well, the local market finished down 0.6% to 7,353 points, with significant sell-offs among technology, energy and financial stocks. When those sectors go down, it's hard for the bourse to go up. Materials, utilities and consumer staples companies outperformed. Commonwealth Bank, ANZ and Westpac all fell 2%, while National Australia Bank was off 1.2%. Among the tech companies, Xero fell more than 3%, Afterpay was down 2.5%, and WiseTech Global was off 2%. Now, Fortescue Metals was the best of the large caps, rising 2.1%, while miner South32 continued its incredible run, jumping 2%. Rio Tinto was another good performer. It wasn't a good day, though, for travel stocks. Fears about new outbreaks of COVID in Europe have tempered enthusiasm for travel, and Flight Centre lost more than 7%, while corporate travel management was off 6%. Michael, the gold stocks also struggled, with the price of the precious metal now trading below $1,850 an ounce, but the battery metals companies did well, with nickel mines up nearly 8%, Pilbara Minerals and Orocobre both up around 5%.
And Sean, just before we leave the markets, there was also an interesting report out yesterday about profitability.
Yes, according to MST Marquee Research, there are 48 companies in the ASX 300, that's 16%, that don't actually earn any profit. And that's about 1/3 more than historical norms. Those 48 companies are worth about 1/10 of the market and have a combined capitalisation of around $200 billion. Now, a senior research analyst at MST described them as birds without wings. And if you invest in companies that don't make a profit, you'll lose your money. It sounds obvious, but it actually isn't. Plenty of companies, particularly in the tech sector, lose money for years before making money. Investors jump in hoping to make a mozza. They're hoping to hit upon another Amazon, which spent years making losses before finally turning a profit in 2002. Each Amazon share back then was worth $18, and now they're worth about $3,676. That's what people want. But the research shows that for every Amazon, there's many, many losers.
Okay. What happened in overseas markets overnight?
Michael, the most important economist in the world is the boss of the US Federal Reserve. And overnight, President Joe Biden nominated Jerome Powell for a second 4-year term, which should calm markets given the current outbreak of inflation. Economists said it also supports the argument that interest rates in the world's biggest economy will rise sometime next year. As a result, bond yields ended up higher overnight and Wall Street was up. European markets were mixed. Also overnight, there were reports that President Biden will release oil reserves in tandem with China, India, Japan and South Korea, which would put further downward pressure on prices. OPEC came out and said it would likely respond, which could mean reducing supply. Overall, Brent crude is trading under $80 a barrel this morning.
We'll be back in a moment with the rest of the day's business news. Sean, there's plenty to discuss this morning. The debate around cryptocurrencies, which seems to be a bit of a debate that we have fairly frequently, but it's creating a real divide in financial services.
Sure is. Yesterday, the country's largest super fund, Australian Super, said it wouldn't invest in cryptocurrencies. Its new chief executive, Paul Schroeder, speaking at a Financial Review conference, said crypto didn't generate an income stream, so it wasn't an appropriate superannuation investment. Host Plus, the day before, said it would invest in cryptocurrencies. The Australian Securities and Investments Commission Chair Joe Longo said he wouldn't be a cheerleader of cryptos and wanted to make sure consumers had access to advice and warnings. But Financial Services Minister Jane Hume said Australia could miss out on opportunities if governments and regulators were fearful of embracing new technology. Of course, all this comes after the Reserve Bank last week made it clear that it thought there was a faddish element to digital units. But the country's largest bank, the Commonwealth Bank, has become a supporter and will allow some customers to buy and sell crypto via its wallet. It really has sent a split down financial markets, those in the crypto camp and those out of it.
Okay. Now, Sean, the new boss of AMP is 100 days in and yesterday spoke really candidly at a conference about why she took the job and about the future of AMP.
Alexis George is 100 days in and she said she's worked hard to improve the culture at the organisation. Now remember, the board had promoted Bo Pahari to run AMP Capital. It then emerged he'd sexually harassed a staff member. In the end, Mr Pahari, then Chair David Murray and CEO Francesco De Ferrari all left the business, as did many talented staff members. AMP's share price at one point got as low as 88.5 cents, though since then it's up more than 30%. Now, Ms. George agreed people, including her daughter, in fact, had actually asked why she'd taken the job. She said she's determined to restore the once iconic business. She said AMP's super business needs to get bigger, so to AMP Bank. She's also interested in super platforms businesses and a financial advice operation, though how that's going to look is still up for debate. And remember, traditionally, AMP is Australia's biggest provider of financial advice.
Yeah, Sean, from the outside, it really does look like the financial advice world is in a bit of a mess at the moment.
Yes, I agree, and I hope Ms. George can do something about it. But AMP, or a competitor, is going to have to invent a new business model that actually works, because there just isn't one yet. Everyone should use a financial planner. We are big advocates of that. But if a planner charges you $5,000 up front, which they need to run their business, people are going to balk at visiting them. So they walk away without advice. There needs to be a middle ground. Even though it ain't popular, I'm a bit of an advocate of commissions as long as there are parameters in place. Something needs to be done.
Yeah. Now, speaking of investing, more people want their investments to make a positive social and environmental impact.
They do. New data from National Australia Bank shows that new and younger investors are putting their money into greener assets like electric vehicle companies, green hydrogen and renewable energy. Tesla is now just outside the top 10 most held stocks on NAB trade across all markets, which is absolutely extraordinary given it's a US company. There's pretty solid evidence now that investors are putting their money where their mouth is. Last week, Edelman's 5th annual Trust Barometer shows that institutional investors are now scrutinising ESG capability at the same level as operation and financial considerations. Michael, green isn't trendy anymore. It's actually a sensible investment strategy.
Yeah, certainly looks that way. And what's happened on the COVID front? What's the latest update?
Much of the news yesterday was centred in Canberra. 5 coalition senators crossed the floor against the government and voted in favour of One Nation's bill to ban mandatory vaccination. The bill was rejected in the upper house, but the protest vote by government MPs was notable. Victoria reported 1,029 cases and 3 deaths yesterday. 89% of that state's population is now vaccinated. New South Wales recorded 180 cases and 1 death. That state has a vaccination rate of 92%. Canberra hit a 97% vaccination rate for people aged 12 and over. A great outcome. Mind you, there are still daily cases, with 11 recorded yesterday, and there were 2 new cases in the Northern Territory. Finally, Michael, the national vaccination rate is now over 85%.
Okay, Sean, what's making headlines in today's news media?
Well, Woodside Petroleum has signed a binding deal to take on BHP's petroleum assets, creating a $41 billion top 10 oil and gas producer with production across Australia, the United States, Africa and the Caribbean. The group has also given the go-ahead to the $16.5 billion Scarborough LNG project, which will be the biggest fossil fuel investment in almost a decade. I mentioned a moment ago, Michael, the 5 coalition senators who crossed the floor yesterday. The Financial Review is now reporting that the federal government has put on hold all contested legislation due to the refusal of 2 of those senators to pass any legislation as a protest against state-imposed vaccine mandates. Senators Gerard Rennick from Queensland and Alex Antic from South Australia are the holdouts. And the Australian is reporting that Queensland MP George Christensen is also threatening to vote against the government, meaning the revolt is now in the lower house, which could force the government to rely on crossbenchers to pass legislation.
Running through some of the other stories around today, the country's largest home lender, the Commonwealth Bank, has provided new property price estimates. It expects house prices to rise by 7% next year before falling around 10% the year after. While not everyone agrees on the quantum, market economists are really starting to agree that prices will rise in 2022 and fall in 2023.
Aristocrat Leisure, the gaming machine manufacturer, has filed a patent in the United States for a self-disinfecting poker machine. The machine would include ultraviolet light, which could be turned on and off, to rid high-touch surfaces of germs. Interesting concept, Michael.
It certainly is. And AMP is very lucky this morning, get 2 mentions in the one podcast. Its funds management business, AMP Capital, will retain control of its $7 billion unlisted office fund after an independent committee recommended against rival proposals to move to either Mirvac or GPT. The wholesale office fund will remain part of the group's real estate and infrastructure investments business, which is due to spin off next year.
That's really good news for AMP, and I think that's why its share price jumped 2.6% yesterday, Michael. Shell will enter the household electricity sector, gaining 185,000 customers of online green retailer PowerShop as part of its purchase of Meridian Energy's Australian operations. Shell and Infrastructure Capital Group have offered $729 million for the assets and plan to split the retail and generation businesses. What's all that mean? The deal should boost competition in the power and gas retailing sectors, and that's good for customers.
Now, we've talked a lot lately, Sean, about Mesoblast, which is the Melbourne-based pharmaceutical group with a share price that absolutely loves bouncing around, and it certainly did that recently after it announced a development on a heart disease treatment. Anyway, it's agreed to a $90 million debt facility with Oaktree Capital Management to pay off existing debt and help expand into the US.
And finally, Michael, fashion jewellery retailer Lavisa said the global supply chain crisis had triggered a range of shortages in product lines, and there's a shrinking pool of contractors to build its new stores. Now, Lavisa is expanding fast. It already has 570 stores across 15 countries and is trying to roll out many, many more, but that's been hampered by these restrictions.
Okay. What's the key overseas news this morning?
Europe is now the global hotspot for coronavirus cases. Germany recorded more than 45,000 new cases in a 24-hour period over the weekend, Michael. The UK recorded 40,000 in a one-day period. Russia recorded nearly 36,000 and France 22,000. In the United States, the most recent daily figure is 41,000. According to Bloomberg, there have now been 258 million confirmed cases and 5.15 million deaths, though most authorities think the true death toll is much, much higher. Private equity group KKR has launched a $33 billion euro offer to take Telecom Italia private. If successful, it would be one of the largest private equity buyouts of a European company ever. The PE group has offered a 45% premium to the last closing price. That, Michael, is a very big deal. And the US has shared intelligence, including maps with European allies, that shows a build-up of Russian troops and artillery to prepare for a rapid large-scale push into the Ukraine from multiple locations, according to Bloomberg. European leaders have been in touch with Russian President Vladimir Putin about his intentions, with frantic efforts being made to prevent an incursion.
Okay, now up next, Sean, is the Daily Interview, and today you're speaking to Stephen Crisp, who's the Chief Executive of Racing and Sports.
Yes, they're listing today. They do all the back-end stuff for gaming sites. Really interesting fella, Stephen, and gave some great insights into one of the hottest sectors around the market and what's going on in that gaming area. Well worth a listen.
Yeah, it's an interesting one. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 23rd of November, 2021. Make sure you're following the podcast. Join us online on LinkedIn, Twitter and Facebook, and sign up for our free daily newsletter at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.